Hi guys, this is CA Balakrishna. In this video, we will be revising Essay 315, a very important standard, identifying and assessing the risk of material misstatement through understanding the entity and its environment. See, this standard mainly deals with risk of material misstatement. Now you can get a doubt that auditor is conducting audit of financial statements. Now, during the audit of financial statements, why we are talking about risk? What is the importance of this concept of risk? Basically, there will be huge number of transactions in the entity, and auditor will not be in a position to audit or to verify all these transactions. Thereby, auditor will conduct risk based audit. Okay, that is the reason why before conducting audit of financial statements, first of all the auditor will identify the risk of material misstatements. Okay, based on the identified risk, the auditor will design his audit procedures. Okay, that is the importance of the concept of risk in relation to audit of financial statements. Now, first of all, let us understand this concept of risk. Okay, once you understand this concept of risk, you will be able to easily understand the procedures that are prescribed under Essay 315. Okay, that we will be discussing under 315. Now, basically, what is meant by audit risk? See, the primary objective of the audit is to give appropriate audit opinion. Now, audit risk means the risk that the auditor might give inappropriate audit opinion. Okay, the risk that auditor might give inappropriate audit opinion is known as audit risk. Inappropriate audit opinion means what type of opinion? Let's say the financial statements are materially misstated. Okay, there are material misstatements in the financial statements, but auditor gives unmodified opinion. Okay, auditor gives a clean opinion. This is example of audit risk. Okay, the risk that auditor might give a unmodified opinion when the financial statements are materially misstated is known as audit risk. Hope this is clear. Now, this audit risk is combination of three types of risks. What are those three types of risks? First of all, there is risk of material misstatement and there is detection risk. We will discuss them. Risk of material misstatement is again further divided into inherent risk and control risk. Thereby, audit risk is combination of inherent risk, control risk and detection risk. Now, what is meant by this inherent risk? Okay, inherent risk means the risk that material misstatements will occur in the entity provided there are no internal controls. Let's say, for example, in case of banks primarily deal with cash. Okay, now in banks the inherent risk is theft of cash. Okay, that is the inherent risk in case of banks. Now, in order to prevent or detect this inherent risk, the bank might establish some controls in the form of, let's say, some cameras. Okay, the bank has planted some cameras in order to detect this inherent risk of theft of cash. Now, the risk that these controls might not work properly is known as control risk. Okay, now the combination of these two risks, combination of inherent risk and control risk together will be known as risk of material misstatement. Hope this is clear. Now, auditor during his audit will first of all determine the risk of material misstatement. How the auditor will determine risk of material misstatement? First of all, he will identify inherent risks. After identifying the inherent risk, auditor will examine or verify the controls that have been placed by the entity and will determine the control risk. Okay, based on these two risks, auditor will determine risk of material misstatement. Let's see. There is a particular matrix for determining risk of material misstatement. Here in the x-axis there is inherent risk, and in the y-axis there is a control risk. Now, inherent risk is low, control risk is low. In that case, the risk of material misstatement is minimal. Inherent risk is medium, control risk is low. In that case, the risk of material misstatement will be low, and inherent risk is high, control risk is low. In that case, risk of material misstatement will be moderate, like this. Inherent risk is low and control risk is medium. Then risk of material misstatement is low, and inherent risk medium, control risk medium, moderate. Inherent risk high, control risk medium, high. Next, inherent risk low, control risk high, moderate. Inherent risk medium, control risk high, high. Inherent risk high, control risk high, high. Okay, this is how auditor will determine the risk of material misstatement. Okay, after determining the risk of material misstatement, auditor will combine, or auditor will apply the concept of materiality. Okay, what happened to this thing? Okay, yeah, auditor will apply the concept of materiality as per SA 320. Okay, and based on this, auditor will design further audit procedures. We can call them as responses of the auditor to the risk as per SA 330. Okay, this is the link between 315, 320 and 330. Hope this is clear. Now, the SA 315 concentrates on this aspect. Okay, SA 315 majorly deals with risk of material misstatement. In order to identify risk of material misstatement, auditor has to determine inherent risk and control risk. How the auditor will be able to determine inherent risk? He will be able to determine the inherent risk by obtaining understanding of entity and its environment. Okay, and by performing risk assessment procedures. Okay, through this understanding entity and its environment and performing of risk assessment procedures, auditor will be able to identify and assess inherent risks. Okay, after identifying inherent risk, what the auditor will do is, auditor will conduct walkthrough of the controls. Okay, how the first of all he will check whether the management has planted controls or not. Okay, whether management has established some controls or not. If the management has established controls, whether those controls are working effectively or not. Okay, first of all he will understand the internal controls of the entity and he will conduct walkthrough of those controls. Okay, based on this he will arrive at control risk. Okay, based on these two risks he will arrive at risk of material misstatement. This is the entire concept that we will be going to discuss under this standard. Okay, first of all we will see how the auditor will obtain understanding of entity and its environment. After that we will see risk assessment procedures. After that we will discuss relating to control risk. Then the standard gets completed. Okay, there are three aspects that we are going to discuss now. First one is understanding the entity and its environment. Second one is risk assessment procedures. Third one is some concepts relating to internal controls. Okay, and after that detection risk. We will also discuss the concept relating to detection risk here. Now, the risk that audit procedures that are performed by the auditor might not be able to identify the material misstatements is known as detection risk. Now, here based on the risk assessment procedures, auditor has determined risk of material misstatement. Now, Now based on this risk of material misstatement, auditor will design his further audit procedures. Okay, he will design his further audit procedures in order to reduce the detection risk. Okay, this further audit procedures we will be discussing in SA 330. Hope that is clear. Now first of all, let us see how the auditor will obtain understanding of entity and its environment. First of all, we will see how the auditor obtains understanding of environment. Okay, here it can be divided into three factors. Okay, while auditor obtains understanding of the environment in which the entity is operating, he will obtain the understanding based on three factors. Okay, first one, he will understand industry factors. Okay, what are the factors that are affecting the industry in which the entity is operating. Okay, under this he will consider competition that is present in that industry, seasonal activity of the industry, and product and technology, and energy cost and supply. There are various other examples given that you can go through. After that, he will also understand regulatory factors. Okay, under this he will see government policies and tax laws, and he will also consider some other factors like rate of inflation. Okay, rate of interest. Okay, like this other factors also auditor will consider while obtaining understanding of the environment in which the entity is operating. Okay, why he is obtaining understanding of the environment? Okay, because by obtaining understanding of the environment, he will be able to determine inherent risk. Okay, inherent risk. In order to determine the inherent risk, he is obtaining understanding of the environment in which the entity is operating. Okay, after obtaining understanding of the environment, he will obtain understanding of the nature of the entity. Under this, what will be verified by the auditor? Okay, or what will be understood by the auditor? Basically, here you remember this cash flow statement. Under cash flow statements, what are the types of activities? Operating activities, financing activities, and investment activities. These three activities will be understood by the auditor. Okay, operational, investment, and how the entity is financed. And he will also obtain understanding of ownership and governance structure of the entity. Okay, this will be understood by the auditor in order to determine the inherent risk that the entity is facing. Okay, inherent risk. And he will also obtain understanding of how the entity is selecting and applying the accounting policies, and what are the business objectives and related risks that the entity is facing. Okay, through this, auditor will obtain understanding of entity and its environment. Next, the auditor will perform risk assessment procedures. This risk assessment procedures involves three types of activities. First one, inquiries with management and others in the entity. Next one, analytical procedures, and the next one is observation and inspection. First one, inquiries of management and others. See, since the business of the entity is being conducted by the management, they know very well what are the risks that are being faced by their entity. Thereby, auditor will first of all discuss or inquire with the management about what are the risks that their entity is facing. Okay, next one, analytical procedures. See, these analytical procedures can be used as both risk assessment procedures as well as substantive procedures. Okay, how? Example, analytical procedures as a risk assessment procedures. Let's say the entity is a manufacturing entity. If it is a manufacturing entity, it will be having a lot of plant and machinery. Okay, in the balance sheet there is a lot of plant and machinery under assets side. But when auditor observed in the profit and loss statement, he doesn't find any repairs and maintenance in the profit and loss statement. Okay, there are a lot of plant and machinery that the entity is having, but there are no repairs and maintenance in the profit and loss statement. Okay, this would be an area of risk of misstatement. Okay, this is how analytical procedures can be used by the auditor as risk assessment procedures. Next, analytical procedures as substantive procedures. Let's say electricity bill. Let's say auditor finds in the profit and loss statement some X amount, let's say some 10 lakhs of electricity bill, and auditor has also obtained an idea of number of units that have been consumed by the entity. Okay, let's say entity has consumed some 10,000 units, okay, during the year, and let's say on an average the price per unit was some 9 rupees. Then total electricity bill must be some 90,000, around 90,000. Now in profit and loss statement, auditor finds that, let's say, the electricity bill was 2 lakhs. Okay, why there is this much of difference? Okay, this is an example of substantive procedure. Okay, using analytical procedure as a substantive procedure. Okay, substantive means based on the facts. This is how analytical procedures can be used as both risk assessment procedures as well as substantive procedures. Next, observation and inspection. Okay, by observing and inspecting the activities that are being performed by employees or management in the entity, auditor will be able to identify the risks in the entity. Okay, these are 3 types of risk assessment procedures. And also, while performing these risk assessment procedures, auditor should also consider the information that has been obtained by the auditor during client acceptance procedure. Okay, this client acceptance procedure will be conducted by the auditor as per SA 220. Okay, information that has been obtained by the auditor during these procedures should also be used during risk assessment procedures. Okay, and also information that the auditor has obtained during other engagements performed. Let's say previously the auditor has performed some internal audit engagement or some other engagements for the entity, and currently the auditor is performing statutory audit. Now during previous engagements, auditor might have obtained some of the information relating to the entity. Auditor has to use even that information for the purpose of risk assessment procedures, and also he should use the information that has been obtained by the auditor during previous engagements. That means in the previous years also the same auditor has performed the statutory audit for the entity, and in the current year also the same auditor is performing the statutory audit of the entity. Now information that has been obtained in the previous years should also be used by the auditor during the current year for performing this risk assessment procedures. So this is clear. That was relating to risk assessment procedures and obtaining understanding of entity and its environment for the purpose of identifying inherent risk. Okay, by this we are done with one part, that is inherent risk part is completed. Now moving to the control risk portion. Okay, basically, and to identify the control risk, auditor will simply walk through the controls. That means auditor will examine how the controls are working. Okay, under this, one of the important question is components of internal control. Okay, what are the components of internal controls of the entity? There are basically 5 components: control environment, control activities, control monitoring, information system, risk entities, risk assessment procedures. What are they? First of all, control environment. Okay, the auditor will check whether the environment of the entity is conducive for the successful implementation of the controls or not. Let's say a particular student is preparing for his examinations. Now for his preparation to be successful, the environment around him must be conducive for his preparation. Okay, if he prepares in a study room, then the environment that is present in the study room will be helpful for his preparation. Okay, or if he prepares in his house, okay, the environment that is present in the house will not be much conducive for the preparation. Okay, in the same way, auditor will first of all examine whether the environment that is present in the entity is conducive for successful implementation or successful functioning of the internal controls or not. Okay, next, control activities. Control activities are the actual internal controls that are implemented in the entity will be known as control activities. Next, control monitoring. Under this, auditor will check whether the implemented controls are performing effectively and efficiently or not. Okay, next, information system. Okay, auditor will also check the information systems of the entity. And entity's risk assessment procedure. See, not only auditor performs risk assessment procedures, even the entity has to perform the risk assessment procedures, because it is the primary objective of the entity to identify the risks that are present in the entity. Thereby, auditor will also check whether the entity has performed its risk assessment procedures or not. Okay, these are the 5 components of internal control. Next, risks that require special audit considerations. Okay, what are some of the examples of the risks that require special audit considerations by the auditor? Risk of fraud. Okay, if the risk is relating to the fraud, then that is more significant and that requires special consideration by the auditor. Complexity of the transaction, significant transactions with the related party, and transactions outside normal course of business. These are some of the examples of significant risks which require special audit consideration by the auditor. Okay, by this essay 315 has been completed, and there are some topics relating to documentation under this essay 315 that you can go through. Okay, in the next video we will be revising essay 320.